Hi everyone, today let's talk about Jerome Powell's comments, then we'll get into all the usual data and charts. Do me a quick favor and like and subscribe and hit the bell to help out the channel. So let's get started talking about Jerome Powell's comments. He really did not stray far from the script. He continues to talk about heading towards that 2% goal for inflation, and he did talk about how lowering rates too quickly could cause further economic growth, which would cause inflation to potentially resurge, and that would absolutely be catastrophic for markets as well as for the broader economy. The interesting thing here is, in considering any adjustments to the target rate policy, they're going to be looking for the data as well as the balance of risks. We have not really heard anything about adjustments to the target rate. It's always been that 2% target. If he were to raise the target rate up a little bit, that would absolutely shift markets. I think that would actually be bullish overall, but that's not something we've really heard, not something I've seen at least. So just keep that in mind. That is something new. Obviously, they're still looking for the data, and he still thinks we're going to see cuts, potentially 3 cuts this year. But the question is when. We still don't know. We are at 5.25, so 3 cuts would bring us down to 4.5. And that's basically where the 2-year is sitting right now. So markets do believe that the 2-year is going to sit in that range, and we do believe the Fed is going to cut into that area. So overall, no real major changes, just that one comment there on potentially shifting the target rate. I also wanted to highlight that NYCB Bank did have to infuse $1 billion in capital. This stock had a bunch of moves today, and I'm going to do a separate video on it, but just be aware that this is happening. There is a bank that's in trouble. Moving over to the Fear and Greed Index, we were absolutely flat for today. Markets did not move very much. They were up a little bit, not recovering all the gains from yesterday, but a little. Strength back into extreme greed, breadth still hovering. Put call ratio no change. Volatility basically unchanged on the day. And then safe haven demand still in regular greed, seeing that pull back a little bit. And then junk bond demand, we have not seen that move for a while. Moving over to seasonality, you can see for the 6th, we were supposed to be seeing a little bit of selling, but it seems like we got that yesterday and then we got the bounce here today. So the question is, did we already see this culmination for the 8th and we now are in the bounce? Or did we just shift a little bit to where this was the dip? It was more aggressive. Now we've seen a bounce and then we're expecting more selling. So that remains to be seen. We've definitely seen that 2% down move. The question is, has that bottomed? Will we see slight rallies or will we see another pullback after today's session? Just watching this as a reference. Moving over to the calendar, you can see nothing here for tomorrow, but Friday is expected to be bearish based on seasonality, and then we get some rallies into early next week. Moving over to the economic calendar, you can see the JOLTS report for job openings came in much higher than expected, but ADP and non-farms unemployment change were weaker than expected. So a little bit of mixed signals there. Atlanta Fed GDP numbers went up for Q1, so that was positive. And then looking at tomorrow here, we have the ECB expected to hold flat. You also have initial jobless claims as well as Fed Powell talking again tomorrow. I wouldn't expect anything crazy to come out of tomorrow. I think he's probably said all that he has to say at this point. And then we do have Fed balance sheet at the end of the day, so relatively limited in terms of data for tomorrow besides Jay Powell. And then taking a quick look at Friday, don't forget if you hold anything overnight tomorrow, you will be holding that into the ADP non-farms. You will be holding that into the non-farm payrolls as well as the participation rate and unemployment rate. All of that data coming out at 8:30 pre-market, and that will obviously shift markets based on those results. Moving over to Max Pain, looks like the servers are back up here. Max Pain sitting at 508 for the Friday session. 509 is current price, so basically sitting right on top of it. You can see that here between 505 and 510. Honestly, where we're sitting right now makes sense for the end of week finish, which is interesting. 500 still has a ton of puts, so I wouldn't expect to finish below that. So that gives you a baseline of about 1.5% over the next 2 days. But like I said, a close right here around Max Pain does make sense. Put call ratios come down a little bit into the 2s. Total options not a ton at 1.3 million. So relatively neutral on Max Pain for me. Moving over to the charts, starting off with the S&Ps, you can see we're up 0.51%, so about 0.5% momentum, still ticking towards bearish. You can see slight rally, did not take out yesterday's peaks by any means, but it did rally through, held that 21 EMA, and then bounced off that level. So that looks like a nice setup here on the hourly chart. As long as that 21 holds, should be in good shape. That's at 509.08 right now, so If that breaks, however, I would expect a push down to the 200, which is at 505.96. Got the 9 EMA sitting here at 508.59 as well. And you can see my level 509.77. And after hours, we did slip below that as well. Actually, on a closing basis, we're below it by about 2 cents. So pretty much on top of it, and then slipping below it after hours. So the level looks a little weak, definitely a couple of support levels. I think the most important one to me is that 21 EMA here on the hourly chart. Moving over to the Tasty charts, you can see nothing really doing here. We actually had it as a slightly bearish day on the Tasty charts, which was interesting. Not sure exactly why that is. Must have been something to do with the closing basis on that bearish candle. Should have been a bullish day though. Interesting there. Otherwise, still hanging around that 8 EMA, which is at 508.25 on this chart. Let's go ahead and look at the hourly just to see if we can get some better perspective there. Looking at the hourly, you can see we were oversold yesterday, so we should have expected some kind of a rally here today, which is what we ended up getting. And now we're right back in the middle of the range, so nothing convincing in terms of direction. You can see volatility starting to contract as those ATR bands come in a little bit, selling off a little bit after hours. 21 EMA sitting at 509.67 here on the Tasty charts. So right in the middle of the range, sideways chop. And then looking at the volume profile, you can see the highest volume candle of the day was that 2 o'clock candle, which was a bullish candle. So maybe that says that we're getting a little bit more follow through to the upside tomorrow. Just something to keep in mind. Moving over to the Qs, very similar setup, rallied through, hit the 55, pulled back to the 21. 21 ended up holding. That's at 438.49. Want to see that hold and then get a bounce higher through that 55. Previous high is at that highly traded zone, 445.73. I don't necessarily think we're going to head that high, but right now everything is still holding. Held the level at 38. We did close just barely below the 9 EMA on the daily chart, which is a little bit concerning. Momentum bearish, RSI slightly bearish. Everything's the same pretty much as the SPY, looking at those same EMAs for a bounce. Moving over to the Qs on the Tasty charts, you can see bearish day right on top of that 8 EMA at 438.56. Still holding a little bit. The volume was pretty strong yesterday. We did see a little bit of volume today, nothing convincing. And then looking at that hourly chart, you can see we hit that second ATR band, pulled back to the middle of the range. We're breaking down a little bit after hours. This actually looks a little bit more bearish to me. Again, super oversold based on the hourly chart. And then you have that first ATR band to the downside sitting at 437.25. We'll see if that area holds. Otherwise, big volume on that bullish candle, similarly to the SPY. And you can see that big volume yesterday coming through on that 2 o'clock candle also. So lots of big movements at the end of day, and it does seem to be buying. Moving over to the Russell and the Dow, similar thesis here. You can see the Russell pulling back to that 9 EMA on the hourly chart, sitting at 204.67. Also tested my level here, 204.62. Tested that multiple times, ended up bouncing. So as long as that holds, we're in good shape. Otherwise, momentum slightly bearish, RSI slightly bearish. Let's look at this on the daily chart. Still a bullish candle, 0.75, still holding the level. Looks like it's set to go higher. The structure is still bullish to me on the Russell. And then the Dow, inside candle, slightly bullish, 0.26. Still below the level, still below the 21 EMA as well. Momentum bearish, RSI bearish. The Dow actually looks a little bit weaker than the others. It looked weaker yesterday and it still looks weaker today. Moving over to the Mag 7, there's a lot of chatter about Tesla being dropped from the Mag 7. Tesla has been an abysmal performer here recently. Google has been struggling also with their stuff with Gemini and some racial concerns with their AI generator. And then Apple also turning pretty bearish over the last couple days. But for right now, we'll look at the Mag 7, and it actually was positive on the day, about 1%. Momentum still bearish, RSI still bullish, still holding at the trend. You can see we touched it and bounced a little bit higher. Not all-time highs by any means, but it's still holding in there. Structure super bullish. Let's actually go to the hourly chart here. Still holding above most of the EMAs and SMAs. It's selling off a little bit below VWAP as well as the 9 EMA, which is concerning, but nothing super convincing. Moving over to Apple and Tesla. Speaking of some of those abysmal performers, they were both down on the day. Apple 0.59. It's been falling off a cliff. We talked about it before. I still don't see support until 165.71. It is in an area of potential support going back to these lows from September, but I wouldn't really. But this price action is a falling knife, like I said, and I wouldn't really be looking at it until that next level. And then Tesla here. Another bearish day, 2.32%. Some issues with their factory in Germany. And you can see they're falling more after hours. Let's look at that on the hourly chart. Continues to fall, looked weak on the day. Pre-market looked weak, slight bounce midday, more selling after hours. Everything looks weak here on Tesla after that initial level broke. And you can see on a closing basis, we're not quite below these lows here from 5 February, but we are right on top of it after hours. And if that breaks, 167.34 is the next level in my opinion. Moving over to AMD and NVIDIA, Moving over to AMD and NVIDIA, both of these continue to go higher just about every single day, seems like. AMD 2.68%, gapped higher in dojied, momentum bullish, RSI bullish. Still holding above the trend line, next level way up there at 240. Doesn't seem like it could get there, but who knows. Semis have been a massive runner. And NVIDIA 3.18%. It hit the trend line here. We'll see how that plays out. The high of day was 187, 897.24, and I had the trend line right there in that same zone. So hit the trend. We'll see what happens. If it can break out, who knows what's above there. Might have to extend out this other trend to see if there's some potential that we could even hit that level. Who knows? For that would be up around 937.84, certainly within striking range. But you can see that trend is pretty much these highs here from June as well as the highs here in July. Realistically, if you make that a little bit more parallel, it's probably up here, which would give you a little bit more room up to 980. Who knows? Seems impossible, but everything about this has been pretty much impossible, and yet it has happened. Moving over to some of the top and worst stocks for the day, we got CrowdStrike having a massive jump, 10.76% on really strong earnings. The stock has been running for a long time, bottomed out around $93, and it's up around $300. So it's had a massive run. That is from January of 23, so it's taken a while to do it, but definitely very, very powerful, and another strong result here. And then Foot Locker, abysmal on the day, down 29.35%, massive selling. They pulled back on their guidance, they missed on earnings, and everything is abysmal there. So big selling and big gains from these two companies. Moving over to Staples and discretionary, the rotation continues here. So Staples up 0.84%, hit the price target at 75.40. We'll see if we can get above that. Let's go ahead and extend out this trend line in the off chance that we hit it. That would put us quite a bit higher, up around that next price target of 77.50. If this level breaks, holds, and pushes, that would be the next level. And then you got discretionaries breaking down further. 0.36 to the downside, momentum bearish, RSI bearish. Broke below the 21 EMA, sitting right on top of VWAP. It did bounce a little bit, but closing below that 180.10 level is quite bearish. 55 sitting at 177.43, and then the next level would be 174.76. So selling off, seems like more rotation. Speaking of rotation, we are moving over to industrials and utilities. Industrials did bounce, hit the trend, and pulled back a little bit. Momentum still ticking towards bearish, so we're starting to see a little bit more weakness. Could not get above the highs here from Monday. And then looking at utilities, positive on the day, almost 1%, got through the 200, looking at that 64.20 level. Momentum bullish, RSI bullish. Looks like utilities are on a run. Moving over to breadth, we are still seeing consolidation here on the 20-day breadth. Pretty positive on the day, did not get above the highs from Monday. Still back above all the EMAs and SMAs, so consolidating, slightly stronger on the day. Similarly here on the 50-day average, bounced off that 9 EMA, back above the level, still between the 55 and the 9. Momentum bullish, RSI bullish, so looks like we could see more bounce here based on the 50-day, 20-day, really not doing much of anything. Still holding above the levels, but in consolidation. Moving over to yields, you can see the 2-year still hovering around that 4.5 area, which is the target for the Fed right now. So currently the markets believe the Fed. And then looking at the 10-year, expecting more moves down to that 4.1 area. But the interesting thing here is we hit that 55 EMA. So we're going to see if that holds. That's at 4.09, momentum bearish, RSI bearish. If this holds, that could be quite strong. Good setup here, break, hit resistance, retest. Could be a good setup for yields, which generally would be weaker for equities. So critical point, watching this one tomorrow. If it breaks down 3.97, and that should be a little bit bullish for equities if it does break. Moving over to the dollar on the hourly and the daily, Jerome Powell's comments sent the dollar much, much lower, reaffirmed the commitment to cuts, and that was obviously bearish for the dollar. Momentum bearish, RSI bearish, continues to break, got below the 200, got below that 103.64 level, hit the 55 EMA at 103.24. If that level breaks, 102.98. And then below that, I have trend support all the way down at 102.12. So definitely bearish. And as the dollar continues to pull back, that should be bullish for equities. Again, watching that 55 closely tomorrow. Moving over to bonds, J&K, slight step up, still in the middle of the range. TLT, on the other hand, did go higher. Broke all the EMAs and SMAs at this point, looking for that 96.50 level. That is my next resistance. Momentum bullish, RSI bullish. Again, you have to see what the 10-year does. If it bounces from that level, this could be another rejection. Just out of curiosity, I want to see what this would look like off of that previous peak. Oh no, we're well above that trend as well. So gap to it, held that level, rallied. So everything on TLT does look a little bit bullish right now. In terms of structure, it has not really shifted yet. You still have a high, lower high with a low, lower low. Realistically, you would want to see this bounce, reject from that 96.50 area, hold a higher low, potentially retest some of these trends, and then rally up and start to establish higher highs if it's going to do it. Right now, we haven't seen that, but on the shorter time frame, it does look bullish. Moving over to volatility, you can see move index selling off, nothing crazy. VIX still in that same exact range on that trend line. Let's go ahead and extend that out. Right to that level, you can see we've been hugging it off of yesterday and today, hit that 200 again, rejected from there. Momentum continues to tick towards bullish. RSI still bullish, so keep that in mind. Does seem like this could be heading higher. Definitely some volatility in markets going into Jerome Powell tomorrow and then the jobs data on Friday. Moving over to my accounts, you can see I did make some adjustments and I did make some money, up about $600 on the day. We'll see how it works out on the thumbnail. And then looking at the IWM, you can see I did roll out to 206 for 2 days from now for a $1.33 credit. So looking to collect that money. Finished basically on top of my max profit, so no real changes there. Let's see what it's doing after hours. It is down a little bit. Might roll it into 205 again for tomorrow. We'll see how that plays out. It did look a little bit bullish going into the end of the session, which is why I kind of went up a strike instead of just selling the 205s immediately, but we'll see how it plays out tomorrow. And then looking at the triple Qs, still in that same position. And you can see I sold 2 at 440. Again, tried to give this a little bit more room, but it seems to be falling a little bit after hours. Not a whole lot, down about 50 cents after hours. Wanted to give it a little bit of room to the upside while still collecting about $280 on that position. And then I went ahead and shifted from the T triple Qs over to the poor man's covered call. You can see I paid about $123 for that strike, really deep in the money down at 344. For a long time from now, 471 days. So not having a lot of theta there. And you can see the deltas there at 74. So it's effectively the same as having 74 shares in terms of bullish movement. And then I sold a 440 call against it here for $1.32. So a little bit after that sale. So trying to collect some money. Again, I can roll that down if I need to, playing it on a daily basis to collect call theta against my longer dated call. Overall, everything is still bullish, and I tried to play it a little bit more bullishly, but that might have been a bit of a mistake. We'll see how it opens in the morning. Let me know down in the comments section what you thought of Jerome Powell's comments, and will he say anything crazy tomorrow? Will it actually shift markets? So far, it's been a bit of a nothing burger. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.